Hey guys, how is everyone doing? Can you all hear me okay? Can you guys all hear me? Let me know. Alright, one person said why, which I'm going to assume is a yes. But that is not enough. I need more yeses, guys. Yes, yes. I think there's a bit of a delay, which there usually is when you're streaming through YouTube. Nice, nice. Everyone can hear me. Cool. Great. So, let's get started then. So today we're going to be talking about how to master Forex in the new year, 2019. Uh, Trading has just started for 2019. I mean, I guess you could have started 9 days ago at the start of the year, but that would have been a bit of an early start. You could have started on the 7th, which was this Monday, but again, that would have been a bit of an early start. I've started trading. I've started trading as of today, or actually technically last night, uh, and I probably I'm just a bit anxious. Not anxious. That's the wrong word. Sorry. I'm a bit bored of not trading. So I was really raring to go, and I really wanted to start trading. So I started a bit earlier than I probably should have. I find that it's usually best to wait until around about the 14th. So the start of the second week of, or the third week, the midway point of January. I think it's usually better to wait until the midway point of January to start your trading. But I'm starting a little bit early just because I really want to get going, and I've just not traded that much since November, and I've been really bored. I just want to get back into it. Too long of a holiday, really, is what I'm trying to say. So yeah, I've started getting back into trading. So I thought, what a good time to do a webinar. Sorry, guys. I caught bronchitis just after Christmas. So I have a pretty bad, I had a pretty bad cough, a very bad cough. And I'm better now, but that cough is just still there a little bit because my throat was under a lot of stress for about a week with just a constant cough. So I might be coughing a little bit throughout this, and I'm sorry about that, but it can't be helped. I really wanted to get this webinar done despite my cough because it's an important webinar. This webinar, we're going to be talking about how to master Forex in 2019. I'm going to be giving you a step-by-step guide. So I'm going to give you a structured plan that's going to allow you to master your trading in 2019. If you're not trading profitably yet, if you're at a point where you're just starting, if you're at a point where you've been trading for 2 years and you just can't make it work, this year you can make it about mastering Forex, but you need to do it the right way. That's why I'm going to give you a step-by-step guide to doing that. So, if you could spend 6 months learning how to trade properly, and then the next 6 months actually making a bit of profit from trading, that would be pretty good for most of you. So the first 6 months of the year, you might not make that much profit. You might break even, you might make some profit, you might do okay. And then the next 6 months you can improve and you can start making profit. To a lot of you, that's not going to appeal because a lot of people, they just want to be in a rush. They want to make money right now, right now. I want to make money next week. But the reality is, sorry again about the cough. The reality is, it takes time to hit those goals in Forex. So I'm going to give you a structured step-by-step guide on how to do that in hopefully as short a time as possible. Now, I cannot promise that every single one of you is going to be profitable within 6 months. Ultimately, it's up to you. It's up to the amount of time you have to put into trading. If you're trading 30 minutes a day, you're probably it's probably going to take you a while. Well, maybe I should not have done this webinar. But yeah, if you're trading only 30 minutes per day, it's probably going to take you a while because you just don't really have the time to invest. If you can spare 2 hours a day, obviously you're going to get there a lot faster. But the goal I want to set for you guys, and hopefully you follow, is 6 months. And I'm going to show you how to do that. Like I said, I'm going to be giving you a step-by-step plan that will make you a better trader. It's going to be 5 steps, pretty simple, pretty straightforward, and it's going to be easy to remember, easy to follow, and very easy to do. I'm going to give you a few tools that will help you with doing that. So, let's get started. Actually, before we do, I'll just give you a little bit of background on myself, who I am. Now, a lot of you probably don't care. You just want to get to the content. But a lot of people, whenever I do these webinars, they ask questions about who I am, what my background is, and stuff like that. So I'd rather just get it out of the way at the start. My volume is at the highest it can be. Is anyone else having audio issues, or is it just a few people? My volume is at the max it should be, and I don't really see how I can improve it. My guess is probably on your computer, guys, people who are having problems, because right. I'm just gonna have to keep going. I'll double check things after the webinar. Yeah, just turn the volume up on your PC. Pretty straightforward to do. Just click here on the bottom right hand corner, click the volume thing, and pump it up. Right. So where were we? I can't change anything on my side. I'm sorry, the audio input is at max capacity. I've never had complaints in terms of volume. And let me just double check some settings here. Right, I put it up. I put some boost on. I don't know if it's going to make a difference. To all of you who can't hear me properly, then I'm not too sure. So we just need to continue. Otherwise, we're going to run out of time because we have under an hour for today's webinar. So, ooh, I'm sorry if it's too loud for some people now, but okay, we've sorted it out. Let's stop talking about volume. Let's get going. So I'm just going to give you a little bit of background about myself for those of you who don't know, because I always get questions about this and then it becomes disruptive. So may as well get it out of the way now, right? So my name is Nick Bencino. I started trading back in 2003 when I was about 16 years old. I started in school as part of a competition we had in school called the stock market game. This is back in Australia. Basically, every student in the class was given I think it was a 50,000 Aussie dollar demo account, obviously demo. And we were told to trade. Uh, Look, I'm not going to go on about this story very much, so I'm just going to cut a long story short. I got really into this competition. Most of the kids in the class didn't really care. Uh, it was because, I'm going to be honest, I'd watched Wall Street with Charlie Sheen. And, what's his name? Martin Gecko. I can't remember his real name, but so I was like really, really into this trading mindset when I started this competition because I just watched that film and I was like, "Oh, being a trader is so cool." So I got into this competition, and I did pretty well. Ended up winning, and that's kind of where my trading career started. So ever since I was 16, I have essentially been trading. Uh, I had a lot of ups and downs. My last 2 years of school, oh yeah, Gordon Gecko. Martin is his no Michael Michael Douglas. Pfft. I mean that's where the M was coming from with Martin. Anyway, it doesn't matter. So yeah. No, it wasn't. I think it was Michael Douglas, not Martin Sheen. Martin Sheen's Charlie Sheen's dad. Anyway, look. But that's probably where the Martin came from. You are correct about that. Anyway, let's get back on track. We're already getting a bit distracted here. So yeah, I got really into this competition, ended up winning, did really well, and that kind of started off my training career. There were some ups and downs. My last 2 years of school, essentially, I spent at the back of the class on a laptop trading. I wasn't even paying attention to what the teachers were saying. I ended up making quite a lot of money when I was 17 in the stock market, but it didn't last. I ended up losing all that money because I wasn't really trading. I was more like just guessing and gambling and risking big and getting super lucky for a while. But that kind of trading always catches up with you because you're not really learning anything. You're just kind of guessing. And when you have no risk management in place, when you have no rules in place, when you're just doing it, you can get a lucky streak. Some of us do. And you can think you're an amazing trader, but then boom, reality hits and you get a margin call, you lose all your money, and then you're like, well, trading's not for me. That's what I want you guys to avoid. The more people who can avoid losing a lot of money trading, the better. I've been through that and it was not really nice. I actually stopped trading for around about a year when I was 17 because I lost a lot of money. I got a job in a pizza shop, as every Italian boy does, because my parents are Italian. I got a job in a pizza shop, but eventually I got back into trading and I took a smarter approach when I got back in. Around about 18, I started trading Forex, and yeah, just from there, things started going well. Took a little while, but I made it work eventually. And around about 2007, I started forexfornoobs.com. I wanted to put together a site that actually taught people how to trade. Back in 2007, there weren't really many Forex education sites out there, and I wanted to share my knowledge. These days, there are a lot of Forex education websites out there, but I've been online for like 12 years now with Forex for Noobs, so sites are quite popular and well respected. Anyway, boom, that's it. Giving you my background. So let's get going. Few rules. Please keep questions on subject. This webinar is not about entering trades. It's not about my strategy. I do plenty of webinars about my strategy. I'm going to link you to them below this webinar in the recording. So when it comes to strategy, I've done those webinars. I've done them very recently, so they're all up to date, and you can go there and watch them. This is not about my strategy. This is about trading in 2019, a step-by-step guide to mastering Forex in 2019. So please keep all questions on subject. We'll not be answering questions about how to enter trades using my strategy. That's already been done. And I'll probably do some more webinars on that later in the year. If you see anybody asking questions that are off subject, please remind them, guys. And other than that, just be nice and be friendly to everyone. If you have a problem with something I say, feel free to voice your opinion. I do not delete negative comments. I am happy to answer negative comments. People who say, whoa, that's bullshit. feel free to say it if you want to. I'm happy to discuss it and explain my position. Other than that, guys, but my point is, be friendly when you do so. You can say that I'm saying something that is inaccurate in a friendly manner, and you can do it in, I'm trying to think of a kind word here, let's just say a mean manner. Don't choose the mean manner, because I don't like mean people. Just annoying, isn't it? No one likes mean people. So just be friendly and we'll all get along. Cool, so let's get started with the webinar, guys. Trading. Forex trading breaks down into 3 main skills. There are 3 core skills to trading. Yes, this webinar will be recorded. God. All right, that's better. There are 3 core skills to trading. Number 1 is your trading strategy. Trading strategy, being able to find trades, take trades, manage trades. That's all part of, that's all one of the core skills of trading. You need to have a good trading strategy, and you need to have the skill to use that trading strategy. Core skill 2 is risk management. Risk management is super important. It is arguably more important than your trading strategy. You could have a trading strategy that's based on flipping a coin. Now, I'm not diminishing the value of a good trading strategy. A good trading strategy is going to give you an edge, and that edge is very, very important. If a good trading strategy can allow you to win 60% of trades, that's amazing. That's better than flipping a coin, obviously. But I'm just saying, theoretically, if a person were to be able to flip a coin and enter a trade, their win rate's probably going to be 50-50, of course. If the target and the stop loss are exactly the same, of course. But with risk management, a person with a 50-50 win rate, so a 50% win rate, is able to make profit. With proper risk management, a person with a 40% win rate is able to make profit. A person with a 30% win rate, so a strategy that is wrong 70% of the time, is able to make profit if they have proper risk management. So for anyone who says risk management is unimportant and they don't really consider risk management a vital skill in trading, they are wrong, because risk management, proper risk management and understanding of risk management allows you to turn a strategy that has a 70% loss rate into a profitable strategy, because you're managing your risk properly, you're getting out of trades that are failing early, and you're letting your winners run. Allows you to make more profit. So risk management, one of the 3 core skills of trading. Number 3 is trading psychology. Trading psychology stitches the other 2 together, because you could have the best trading strategy on the planet, but if you do not have control of your trading psychology, you are going to do very common things that new traders do, like exiting good trades early because they turn around a little bit and you freak out, only to have them turn back in your direction and then hit your target. I'm sure pretty much everyone here has done that. I've done that in the past. Honestly, I've done that not too long ago, because trading psychology is something that I am very good at, but I still have my flaws with my trading psychology, and I think every single trader does. But as long as you work on it and it's strong enough to take you through, then you're going to be fine. It's one of the 3 core skills of trading. And it stitches the other 2 together, because trading psychology permeates everything you do as a trader. Without being able to master your emotions, you're just never going to be a profitable trader. Now, you can get by with 2.5 of these skills. So you can have a great trading strategy, you could be great at risk management, and you could be okay with trading psychology, and you can get by. You could get by with 2.5. You can't get by with 2. If you have a great trading strategy, great risk management, and your trading psychology sucks, you're not going to be a profitable trader. If you have a great trading strategy, great trading psychology, but your risk management's atrocious, you're not going to be a great trader. You're probably not even going to be a profitable trader. If you have a crappy trading strategy, a good risk management, good trading psychology, again, you're not going to be a profitable trader. Having all 3 of these core skills is vital. And with this strategy that I'm going to teach you, this is not a trading strategy. This is just a step-by-step guide to mastering Forex in 2019. With these 3 core skills, this strategy is going to help you master these 3 core skills. So let's get started. It's a step-by-step guide, 5 steps. Step 1, pick a strategy. Now, when I say pick a strategy, my recommendation is obviously, I'm a bit biased with this, is my strategy, because I feel my strategy is one of the best strategies out there. I've been working on it pretty much ever since I started trading Forex, which was when I was 18. I am now 33 this year. So that's 15 years. Yeah. Good trader, not that good at math, but I think it's 15 years. So I've been trading my strategy for 15 years. I've been constantly improving it over the 15 years, been refining it, making it better, making it, just refining it essentially. My strategy is based on pure price action with no indicators. So I trade indicator free, which is just a clean and easy way to trade. My strategy allows you to trade all time frames from the 5-minute to the daily. My strategy can be either low or high maintenance, however you want it. If you want low maintenance, you stick to the larger time frames. You don't have to take that many trades. If you want high maintenance, if you have a lot of time to spend, you could trade 5-minute charts and just take a bunch of trades every single day. It's basically the ultimate flexibility. Now, my strategy is available for free, or there's also a course, which is kind of like an advanced version of my strategy. I'll give you a link to my free version and the course below. But the point is, pick a strategy. It doesn't have to be my strategy. I'm saying my strategy because, like I said, I'm a bit biased. But you can pick any strategy you want. It doesn't have to be my strategy. The point is, pick a strategy. Pick a strategy and stick to it. So step 1 is to pick a strategy. If you don't like my strategy, that's completely fine. Not everyone does. It's not for everyone. Pick a strategy. We're talking about how to master Forex in 2019. Step 1 is to pick a strategy. Step 2, get a demo account. Now, most of you are going to, well, not most of you, a lot of you are probably not going to be happy with trading a demo account. But trading a demo account when you're starting out is kind of important because it eliminates a lot of the risk of trading. So the risk is losing money. So you get no risk essentially because you're not losing money, but you learn a lot through trading a demo account. Now, what I'm asking you to do is to spend the first 6 months of 2019 trading a demo account. If you have a lot of experience trading and you're still not profitable, you might be a bit more comfortable with things. So you might be okay with a small live account instead of a demo account. But I do highly recommend for most people, especially new traders, to start with a demo account. Just do 6 months with a demo account. Think about it this way. The 6 months, so from January, sorry about that, from January to the start of July, if you spend those first 6 months on a demo account learning to trade, implementing this step-by-step plan I'm going to teach you, then the next 6 months after that, you can switch to a live account and you could be trading profitably. And then the next 6 months after that, you can be trading even more profitably, so on and so forth. So you're basically sacrificing 6 months to learn to trade on a demo account where you experience very little risk, and then you can switch to a live account. What do I call a small account? I mean, that's completely up to you. It's all relative, isn't it? I mean, if you're a millionaire, then a small account might be $20,000, $30,000. If you're making $10,000 per year, then a small account's going to be $50. I mean, it's all relative to how much money you're making. I'd say for most people, average people, a small account's going to be somewhere in the vicinity of 500 USD. 500 USD is a decent amount to start with. It's a little bit on the low side. You might have to skip some trades with larger stop losses because the minimum lot size is not going to allow you to have a large enough stop loss, but you should be able to take most trades. 1,000 is the sweet spot, generally speaking. So it just depends. Right. So a demo account allows you to master risk management without actually taking any real risk of money, any real monetary risk. Yeah, Giovanni. OAND allows you to trade individual units, but still, you can't get low enough a lot of the times to have a large stop losses. Demo trading is forgiving, so it removes a lot of the stress of trading. It reduces the stress, essentially. It reduces the psychological stress of trading. Remember how I said there were 3 core skills to trading? Mastering your trading strategy and mastering risk management first, and then slowly mastering your trading psychology is generally the best way to do things. If you jump into a live account right away, generally speaking, what's going to happen is you're going to be trying to master all 3 of those skills at once, because the trading psychology is going to become a huge issue because you're trading real money. It is much, much better to master trading strategy and risk management first, and then switch to a live account and start learning trading psychology. So, let's go to step 3. Step 3, define your risk. So you need to set risk per trade, essentially. That is how much of your account you're going to risk on each and every trade. I recommend 1% to start with. Now, 1% is not what you have to stick to when you switch to a live account. If you want to grow your live account faster, you can risk more than 1%. I know a lot of people say you can only ever risk 1%. I don't necessarily agree. I think it's safer to risk only 1%, definitely safer. But you can risk more than 1%. But while you're learning, on the demo account, just set your risk to 1% per trade. It's just a simple amount, and it's just easy to keep track of, and it's easy to do. Once you've got your first 6 months under your belt, or once you've got, it doesn't have to be your first 6 months, but the first 6 months of 2019, and you've learned a little bit more about risk management, you've learned a little bit more about your trading, you can start toying with that percent. You can pop it up to 2% if you want. You could take it down to 0.5% if you're more comfortable with lower risk. Totally up to you, because this depends on a lot of different factors. But for your first 6 months, let's just keep things simple and set your risk to 1%. Target on average 1 to 2. So what is 1 to 2? 1 to 2 just means your stop loss and your target. So stop loss is 1, target is 2. Basically, your target is double your stop loss. That's what you want your average target to be, at least double your stop loss. You can dip a bit lower on certain trades when it makes sense to. No lower than 1.5, but 1 to 2 is what you want your average to be. Do not adjust your risk yet. Now, this simply means that once you start to understand a little bit more about risk management, so this should be around about July if you follow this this step-by-step guide, then you can start adjusting your risk on each trade. So you might say this trade is a little bit risky. So instead of risking my full 2%, I'm going to risk 0.5% on this trade because this trade is just too risky for me to go in with a full 2% risk. You might say, wow, this trade is very, very strong. It's a very, very good trade, very strong trade. I'm going to risk 2% on this trade instead of my normal 1%. Don't adjust your risk yet. You can do that later. Stick to 1%. I'm just reading all the comments. I'll answer some of these questions later. Let's leave questions until the end, guys. And make sure your questions are on subject. Step 4. Set a trade goal. Now, this is where it starts getting important. This is one of the vital steps, and it is setting a trade goal. Now, you want to set a trade goal of 30 to 100 trades in the first 6 months. Now, 30 is the absolute bare minimum. The best number to aim for is 50 or over, but 30 is the bare minimum. The reason I have such a wide range here is it's going to depend a lot on you. Now, if you're the kind of person that has very, very little free time and you can only trade, 20, 30, 40, 50 minutes a day, then you might need to settle with taking 30 trades in your first 6 months. If you're a person that has a bit more free time, you might be okay doing 100 trades in your first 6 months. Sorry, guys. I'm no longer sick. I've just got this cough because I'd been coughing so much that my throat is just still kind of in pain. But yeah, I'm not sick anymore. Just when I talk a lot, my throat starts hurting again and the cough comes back. But yeah, I'm just going to push through it. So we're going to take 30 to 100 trades. 30 to 100 trades, important. If you can do it in 3 months, if you can take 100 trades in 3 months, then awesome. All you're doing is accelerating this plan. If it's going to take you 6 months, that's completely fine. Aim for over 50 if you can. If you can get over 50, that's going to be great. Now, you want to journal every single trade in a proper trading journal. I'm going to link you to my trading journal below. It's a free Excel spreadsheet trading journal. It's pretty straightforward, very easy to use. Now, a lot of people don't really journal their trades, and this is where they fail at trading. This is where most people make the biggest mistake in their trading career. And this is where most people end up, this is the reason most people end up failing, because they don't journal every single trade. Journaling your trades, and this is way more important, this is way different to the trade log that your broker provides you of every trade you've taken. That is not a trading journal. A trading journal is a completely different thing. I'll show you my trading journal towards the end of this webinar. A trading journal is a very different thing. A trading journal allows you to track details that your broker is never going to be able to track because they're details in your head. You need to track every single trade. Why do you need to track every single trade? Well, I'll tell you in step 5. The final part of step 4 is to stick to your strategy until you hit your goal. So many traders who are new, what they do is they'll pick a strategy. After 2 weeks, they've taken a few failed trades and they'll be like, oh, this strategy doesn't work. Let's pick another strategy. But that's not how it works. That's not how trading works. You need to stick to your strategy for at least 30 trades, preferably 50 trades. Take 50 trades and then assess the results. You can't give up after 2 weeks. You can't give up after 3 weeks and switch strategy, because all you're going to be doing is jumping from strategy to strategy, never giving yourself enough time to actually learn a trading strategy properly, and you're going to be failing constantly for the next year, for the next 2 years, for the next 3 years, and you're never going to get anywhere. You need to pick a strategy and you need to stick to it. And as you're sticking to it, you need to journal every single trade along the way. It is so important. Why is it important? Step 5, review your performance, see what you did right, see what you did wrong, and make changes. Now, this is where your trading journal allows you to become a better trader. When you mark everything, actually, you know what? I'm going to bring up an example trading journal real quick, just so you guys can visualize what I'm talking about. I'm going to link you guys to this journal. So I'm going to be releasing a new version of this trading journal. A better version of this trading journal this year. A version that has a lot more information. So this is what a trading journal looks like. It's a very simple tool. What you're doing is you're recording information about your trade. And the reason this is important is because it allows you to look back on all your trades and figure out what you're doing right and what you're doing wrong over the long run, over 50 trades. There's no way you could possibly remember 50 trades unless you journal them down. When you journal them down and you have 50 trades in here, you're able to spot commonalities or similarities, let's say, between your winners and similarities between your losses. And when you're able to spot similarities between your winners and similarities between your losses, then you have an idea of what you're doing right and what you're doing wrong. You might find some connections in your trading journal that you could never possibly find without actually having a trading journal. You might find, for example, that all trades taken on the 1 hour chart, or not all of them, but let's say 90% of them end up failing. And that's revealed to you through your trading journal. You might find that trades in which you do not feel confident. So when you answer this question, how do you feel about this trade? Let's say that 75% of the trades where you wrote not confident before you entered the trade ended up failing. Well, then you know that you have some kind of intuition based on probably something about the chart that you don't quite understand yet, but subconsciously you might know it, that's making you lack confidence in that trade. And then you know that when you're not confident, you probably shouldn't take the trade. You can find out a whole lot of information about your trades by using a very simple trading journal. It doesn't even take that long for you to fill it out. I mean, it's really not that hard to fill out a trading journal like this. You might find that trades taken on Euro GBP, for example, have all ended up losing. So you've got 100 trades in here. All your Euro GBP trades are losses. What does that tell you about Euro GBP? Maybe I shouldn't trade Euro GBP anymore. Maybe it doesn't work well with my strategy. These are very simple examples. You could find a lot more information in a properly kept trading journal, but I'm just giving you a few very generic and simple examples of what you can find by recording this data. And when you record this data, then you are able to improve as a trader. So, the plan is simple. I call it treat yourself. Trade your strategy for 50 trades, record all your trades, examine your results, amend your strategy. So after you examine your results, you make amendments to your strategy, and then you trade your strategy again. So for the first 6 months of this year, what you should do is follow these steps. Follow these steps, and let's go over them again, just real quick. Step 1, pick a strategy. I recommend my strategy. Step 2, get a demo account. Step 3, define your risk. Risk 1% per trade is my recommendation, just to get started. Step 4, set a trade goal. 30 to 100 trades. This is going to depend on how much spare time you have to dedicate to your trading, but set a goal for the first 6 months. So let's say you do 50 trades. 50 trades is a good number. Let's say you do 50 trades. In your first 6 months, you're going to take 50 trades and you're going to record every single one of those trades in your trading journal. And you're going to stick to your strategy until you hit that 50 trade goal at a minimum. You should stick to it beyond that, because that's when you start making changes and improvements to your strategy. But for at least 50 trades, don't jump around from strategy to strategy, because that's going to get you absolutely nowhere. Stick to your strategy for at least 6 months until you meet that trade goal of 50 trades or 100 trades or however many trades you've set your goal at. Once you hit that goal, take a look at your trading journal, review your performance, figure out what you're doing right, what you're doing wrong, make changes, set a new trade goal, and repeat this process. This process is not something you do just once. It's something that you do every single 6 months for your whole trading career. I'm still doing it. I'm still doing this. Now, I've changed my review to at the end of each year. I don't review every 6 months anymore because I've been trading so long that I don't really need to review every 6 months. But If you're new, if you're not yet a profitable trader, you should be reviewing your strategy every 6 months. You should be making amendments and you should be following this process. So it's just a kind of circular process that you do for your entire trading career. And it constantly allows you to improve, to get better, to make changes to the strategy, to optimize it, to keep up with changing market conditions, and to just even become profitable. Just starting out, this allows you to become profitable. After you've become profitable, it allows you to become more efficient. In other words, more profitable. So that's how it works. It's a very, very simple plan. And I want you guys to implement this plan in 2019. I want you guys to start right away. Start this week. Start recording every single trade. Set your goal. Take those 50 trades. Look at your trading journal. Figure out what you're doing right, what you're doing wrong. I'm just looking at the questions. I've got no idea what you're talking about, man. I'm sorry. I can't really teach you how to tell your family and friends to leave you alone. That's more of a personal thing that you need to do yourself. Giovanni, that is a good question. Forex Tester. Forex Tester is a really powerful platform for those who don't know what it is. It allows you to essentially rewind charts and then play them back and trade them as if it was real. You could speed up and slow down and pause and whatever. So you could speed up the process. Is it cheating to do it on Forex Tester? Yeah, I think so. I think Forex Tester is a very useful tool and you can use it. For sure you can use it. But the best way to do it is live in current markets. Why is that? Because your strategy needs to be adapted to today's market, not 2012, not 2013, not 2014, not historical markets, which is what Forex Tester is going to train you on. Your strategy needs to be adapted to the current political climate, the current economic climate, the current everything, what the market is doing right now. Forex Tester is very good, but it's not going to teach you how to trade in 2019. It's not going to allow you to constantly adjust your strategy in 2019. So I would say, yeah, it is kind of cheating. You should follow this process and improve your trading. And as I said, this is a process that you're going to be doing your entire trading career. It's not something you're going to be doing just this first 6 months. You're going to be repeating and repeating and getting better as a trader with time. All right. This webinar is not going to go on much longer, guys, because as you can tell, my throat is still a little raw, let's say, from almost 2 weeks straight of non-stop coughing. So let's do questions and let's wrap this thing up. I mean, it's a pretty straightforward thing. Trading in 2019, follow this process. I'll be linking you guys to my trading journal below this video. So you'll be linked to my trading journal. You'll be linked to my trading strategy, and I'll give you everything you need in order to implement this plan. Trade, record, examine, amend. Trade, record, examine, amend. Trade, record, examine, amend. Giovanni, well, I mean, you're generally speaking sticking to the same strategy. So about making tweaks to your strategy after I'm reading out the question. After reviewing the data, how do we know we're not doing what you said at the beginning? The idea of strategy hopping. Well, you're not changing to a whole new strategy. You're just making amendments to your current strategy based on real data. Based on real data. So you're looking at real solid data, your trading history, and you're making changes based on that. You're not making changes on a whim. You're not just saying, oh, I've lost 3 trades in a row. This strategy sucks. I'm going to switch to a new strategy. No, you're looking at real solid data and then you're making changes based on that data. You might find that with those 50 trades, you have 4 trades that failed that were all on USD JPY, for example. Let's just, for a random example. Now, you might say to yourself, those 4 trades, I don't really have enough data to say that USD JPY is not a good pair to trade. I need to take another 50 trades before I decide to eliminate USD JPY. So you're not making changes based on a whim. You're making changes based on real data. And that's the distinction here. Crypto investor, do you have any real job? I said at the start of this webinar, let's keep the questions on topic. I don't have a real life job or whatever you call it. I trade full time, but yeah, it's not on subject. Is it better to trade 1 to 4 hour timeframes instead of daily if you have more time? The best thing is always to trade all the timeframes. So if you can trade 1 hour, 4 hour, 6 hour, 8 hour daily, and even sprinkle in some 5-minute chart trading, some 15-minute chart trading, that's going to give you the most trades. So that is certainly better from a learning perspective. You'll learn a lot faster because you'll be exposing yourself to to a lot more trades. So yeah, certainly better to trade the lower time frames. If you want to focus on a specific set of time frames because you don't want to be trading all different time frames because you think it's going to be a bit too much as a new trader, then I would certainly say stick to the 1 hour and the 4 hour time frames, because those are lower time frames and you'll be able to take a fair few trades. But I would also suggest sprinkling in some like 6 hour chart trading and maybe some 30-minute chart trading. How much do you recommend to spend per day? The more time you can spend trading, the better. There's obviously going to be a point where you're spending too much time. If you're doing 8 hours a day, you're probably going to suffer from chart burnout, where you kind of like essentially burn yourself out from staring at charts too long. But if you could do 2 hours a day, then definitely do that. You could maybe even do 3 hours a day, 4 hours a day. The more time you spend trading, the faster you're going to learn. I would definitely recommend spending, if you can manage it, at least 4 hours a day. Speeds up your learning. Where do you start demo trading? I mean, I can't really help you with that, man. You just need to Google it. And there's like a million different brokers with demo platforms. Every single broker has a demo, I think. Crypto investor, I can't talk about leverage. It's not the subject of this webinar. Giovanni, what is a good sign that we should look for to move from a demo to a small live account? That's a good question. But it's a very difficult question to answer. There's no real kind of sign. It's just more something that you're going to personally decide when you're ready. Some people, they want to have at least 1 year of solid profit before they move from demo to live. Some people, they do it before they're even profitable, when they're just breaking even. Uh, it really is a personal choice in the end. It's not something that I could really answer in this webinar. If I were to take a look at your trading results, then I could certainly say, all right, I think you're at a point where you can move live, but it would be on an individual basis type thing. I couldn't really say it without knowing you better. All right, guys. My voice is obviously getting a little stressed out. My throat's getting a little stressed out from this webinar. First time in a little while that I've talked for almost an hour straight without stopping. So I think I'm going to call in Bluecade Nebs. There is no free forum on the website. There's a forum for Forex Mastermind members, but there is no free forum, so you can't really ask them there. Just email me the questions, I guess. I can answer a few questions. I can't answer like a million questions, but oh, cool. Yeah, then ask on the forum, man. Oh, I know who you are. I should have known from the Nebs part. The blue K threw me off. Yeah, ask on the forum, man. All right, guys. I'm going to call an end to this webinar. Probably not one of my best webinars. It's a bit hard to talk and to think when your throat is on fire. So I'm going to go have a bit of tea or something and try to calm the pain down. I'll catch you guys in the next webinar, which will be more about strategy and trading than this webinar. Probably around about this time next month, we'll be holding another webinar. I think that one webinar might be, well, I don't want to spoil the surprise, so I'll catch you guys later. Thank you for attending, and I'll see you in the next webinar.